Depends what we're talking about in terms of what is a storm. Is it a recession? And what type of recession are we talking about? Because storm implies a really big, deep recession.
And in terms of what we're seeing specifically in this environment, we're seeing customers wanting to lean in to try and save on costs, exactly like we saw in 08 and 09 and in parts of the pandemic. The US is still resilient from a consumer standpoint. Yes, there are slight pockets of weakness in regards to consumer cyclicals, but overall, consumer still spending, industrial still strong. Where you're probably globally seeing the most weakness is probably the UK market right now.
I just don't think that we have all of the indicators there to suggest that even if we go into a technical recession, it's going to be that deep recession that the word storm implies.
Maybe the storm is a bit excessive, but it is somewhat widely anticipated because for pretty much the last 12 months, investors have been positioning for recession, and this recession is taking time to come.
I think Europe has already been pretty cloudy over the last couple of months, so it's always a matter of where your starting point is. And the US always looked extremely resilient, so I think in this case, there are more clouds gathering now in the US as finally this recession is going to come. While in Europe, I think it has been very cloudy over the last 2 years.
As of now, the market is pricing the best of both worlds with a Fed cutting rate in the second half, but earnings staying resilient, and we're seeing something else to give. So our money is on a much more challenging market in the second half.